Tanya? Do you have a particular one or their group of lenders that you use?
I prefer to use smaller local banks. The big banks take forever and they only want perfect financials. So if you're trying to do, Bank of America, Wells Fargo, US Bank, any of the big banks, their decision makers are spread out all over the country and you have 12 layers of red tape to go through in underwriting. So when you're dealing with the smaller local banks, they usually have all their underwriters and decision makers in one building. And so you can get things processed much easier.
I have a question about SBA. I've had some experience kind of on the other side. I bought a business from a people that had an SBA loan, and it was a trucking company. And everyone had pledged everything. At that time, I don't know if it's changed much. It's been several years ago, but they borrowed, let's say, 200,000. They couldn't pay it back. I think it was 400,000, but they had to pledge everything. It was personal guarantee, right?
Mm-hmm. Yep.
And so all the officers in that company were the dad and the three sons. They all lost their houses.
That doesn't make sense to me because the 200, if they only owed 200,000, I mean,
maybe it was more, but whatever the amount was, they personally guaranteed it and they couldn't pay it. And their houses were pledged. Actually, the reason that 200 came to my mind is that's what we ended up buying the business for. 2 years before, it was offered to us for $2 million, and then we bought it for 200,000. So whatever the amount that they owed, it was kind of behind the scenes. I don't know exactly.
Oh, okay.
But that was something that stuck in my mind. We sat around this table with all the families, and they all had lost, their family business. They'd lost their houses too. I'm guessing that still is the case. It's personally guaranteed, right?
It is personally guaranteed, and if you have any real estate, they will collateralize. They will take a second out on your real estate. So, however, there are people that buy businesses that don't have any real estate, and so therefore there's very little collateral. And those loans are harder to get through. Like those loans you can't get through a B of A or a Wells Fargo or a US Bank, but you can get them through the smaller banks as long as the business cash flows well and has relatively clean financials to prove that. If you have 1 million add backs, then no. But if the business, if the books and records are relatively clean, the business cash flows is strong, and the buyer has excellent credit and experience in that industry, then even if the buyer doesn't have real estate, you can still get that loan done.
So the experience in the industry is a big deal.
Mm-hmm.
Okay.
Yeah.
What about over collateralization on a loan? I mean, you've seen it, I'm sure, where the loans for whatever and the collateral is maybe double what they're borrowing. Is there any remediation on that for the borrower?
Yeah, I mean, they can go to a different bank. They can go to, if the lender, because banks that I work with, I mean, they will collateralize. Like I just did a transaction a couple months ago that it closed, and there were 4 partners in this LLC. All of them had real estate. So all of them had more than 20% ownership, right? So all of them had to personally guarantee. They had these 4 pieces of real estate as collateral. And basically the lender that I was working with said, we don't want that much collateral. It's too much. So they need to tell us which they want to use. And they ended up using 3 out of the 4, but they let the buyers determine that and tell them, they said, this is the amount of collateral we need. You tell us which properties. And then they made sure that they did the appraisals to make sure this collateral was sufficient, but they didn't want to over collateralize. So it depends on the bank that you're working with.
Yeah, that's good to know, actually. The other question would be, out of those 4 people, one has he's worth 10 million, the other's worth 500,000. And they're, and then you've got the guy worth 10 million has the most to lose in that case. Have you seen a change in ownership and equity over a deal like that? I mean, that's among the owners, I'm guessing. They're the buyers.
Yeah, I mean, I would say that, there are ways to mitigate that risk. And certainly if somebody's worth 10 million and the other is worth 500,000, they can put some type of a buyout, buyout plan together. Or they can, they can find a way to mitigate that risk.
Sure.
To the one guy, or to share the risk among all of them. So,
and then another option, Dick, is to speak to an SBA loan packager if you're not too sure, because a packager will a good packager would deal with at least two dozen different banks, and they'll know who to place a deal with. So that's just another option. My advice is always to deal with a local bank that you have an existing relationship with. It's going to be the easiest path of resistance, especially if you have a good relationship with them. But another option is to use a packager, because if you go to one bank and you submit the package, if for some reason they turn it down, you're going to have to start the process all over again with another lender. So speaking with a packager is always a good option too.
Yeah, I mean, you need to know several different SBA lenders, because they all have their own things that they like. Like some lenders will do car washes and some won't. Some will do restaurants, some won't, so there are certain lenders, they like manufacturing, and others it's like, yeah, we kind of steer clear of that. So you need to have several lenders that you deal with. And then one of the lenders that I always keep in mind is actually very active in the IBBA, a company called Diamond Financial. Steve Mariani, I can't even remember what state he's in, but I believe that they're a packager, because I think they do SBA. I think they do loans all over the country.
Yeah, they're in New Jersey, if I'm not mistaken.
Are they in New Jersey?
I believe so, yeah.
Yeah.
I get solicited from them all the time. Yeah, I think they're from Jersey.
Yeah, so Steve is kind of like, I'll go to him kind of as a last resort. If my local connections don't work for some reason, then I'll contact Steve. I can tell you, last time I contacted them though, I mean, they don't do loans under, if the loan amount is going to be under 350,000 or something like that, they're not going to do it. So your local banks, if you have a good relationship with some of your local banks, and you want to make sure they're a PLP lender, a preferred lender, preferred SBA, they can do their own underwriting. But if you establish some good relationships there, and then what kind of deals they like, even if you have a deal that's small, let's say their minimum loan amount is 350,000, and you bring them something that only, the loan is going to be 200,000, they'll do it for you because of that relationship that you have. So, that's why you just it's nice to work with your local people.
I know it's 11 o'clock here, but I had one more question about lending.
Yeah.
So of all the deals, Tanya, you've done, I'd like to ask these broad questions. How many need a lender, and how many of those that need a lender go to SBA and not a traditional lender?
The majority of the deals that I've done where lenders were involved, it was SBA loans. The majority of them, I would say probably less than 10% if a lender was involved, or let's say if any kind of loan was involved, less than 10% of them, it was not SBA. And then it was maybe because of the amount or something else, it was like an equity line of credit on their house or something like that they went and they got the equity line so they could write a check in full for the business, because the business financials didn't qualify for SBA, or there was other reasons where SBA wasn't going to work, and so they did it differently. I've never had anybody go with a regular commercial loan though, other than private equity, and I'm talking small businesses. I'm not talking about deals where you've got private equity, because that's a whole different financing game.
And keep in mind with a business acquisition, if you go through SBA, 7A, you're getting a 10-year term. And I don't know of any banks commercial that would make a commercial loan for 10 years on a small business acquisition.
Yeah.
Some businesses need asset-based lending. That would be accounts receivable lending, that type of thing.
Yeah.
Have you run into that much?
Yeah, I mean, I've run into some companies that have done some factoring or done some AR lending. I've also seen companies that will do that'll do lending based on, they actually tap into the merchant account somehow. And so the, as you know, in retail, a lot of people pay with credit cards, and literally they have a program where, you know, a certain percentage of every charge automatically gets siphoned off and goes to them. And I don't know how that's done. To me, it always seemed a little excessive, and the interest rates and the way that they did it seemed incredibly expensive and seemed like it was going to be severely detrimental to the business. So it's not anything, you know, I saw that it exists, but it's not anything I would ever recommend to one of my clients.
So
You're mute. John, you're mute.
those lenders will make a loan shark blush with the rates that they charge.
Yeah.
I mean, it's just ridiculous when you get in any kind of short-term money, and sub businesses don't have a choice because they can't go through, you know, regular channels through the banking system. And, but you're paying an extraordinary high interest on it.
Yeah, but I mean, basically all they're doing is having 3 people who come in, you know, they're just getting 3 more people in with shovels to dig the hole deeper. You know, that's the way I look at it. You know, you're just kicking the can down the road to the inevitable because, I mean, they're already in over their head. So, yeah, I don't know. It's like those payday loans. I mean, I got a postcard from one of those payday loan places, and it was like 199% interest. Like, are you kidding me? I mean, come on now. You know, you're taking the people that go to those payday loan places are people their car broke down and they're trying to get their car fixed so they can go to work. I mean, this is somebody who's living paycheck to paycheck already, and you're charging them 199%. I mean, stuff like that really turns my stomach. And there's a lot of people that think, oh yeah, that's just capitalism. You know, I think that's just, you know, stepping on.
They're predators. They're predators.
Yeah, exactly.
The one industry where I've done legal lending, and that's one industry where you can get away charging a 25% interest rates, and attorneys will take it all day long if they're mass tort attorneys, because they just need the cash flow to continue to buy advertising and continue to run the day-to-day operations of their law office until they make a settlement.
Yeah.